Bitcoin, the currency everyone's heard of, many have invested in, but only few understand. Bear with us as we break down blockchain and Bitcoin into bite-sized bits. We invited a guest speaker to make this tough pill a little bit more fun. It's Morgan Freeman's impersonator.
It has now been 10 years since a person or a group of people under the pseudonym Satoshi Nakamoto created and pioneered the blockchain. This technology now forms the backbone of the payment network for the cryptocurrency Bitcoin. By using Bitcoins, you can send transactions to other participants within the blockchain ecosystem. Without the blockchain ecosystem, the exchange of Bitcoins is simply not possible. The widespread confusion surrounding the terms Bitcoin and blockchain has come from the way people discuss them, not least because it is easier to pronounce. Blockchain has become almost synonymous with distributed ledger technology. What are distributed ledgers? As the name suggests, distributed ledgers are storage databases. Think of a spreadsheet that records an informational dataset. Now imagine that this spreadsheet was duplicated across a network of millions of computers. Each connected computer has a complete and identical view of what is stored in the spreadsheet. Instead of a single entity managing the information of the dataset, in a distributed ledger, everyone in the system has access and equal rights. That is why the blockchain is often described as a decentralized peer-to-peer network. The database is continuously updated and each change is validated by its users rather than some central authority. When new information is added to the database, there is a consensus among its users that the information has been rightfully processed. This is why distributed ledgers get so much attention. They allow you to get rid of the middleman and create trust through transparency. In the blockchain, every Bitcoin transaction that has ever been processed is permanently and irreversibly stored. This means no money can be double spent, lost, or tampered with. Like its founder, the system relies on pseudonymity, meaning the identities of users are not directly displayed. Every user has an address that uniquely identifies them in the system. Transactions are recorded in blocks, which are chronologically added to the distributed ledger. Blocks created on average every 10 minutes contain two pieces of information. One, the details of new transactions. Two, a cryptographic hash connecting the new block to the previous block. This adding of blocks occurs through the so-called mining process that involves the processing of new hashes. A cryptographic hash is simply an abbreviation of a string of information. By decoding a hash, one could figure out the abbreviated information. In the case of blockchain, cryptographic hashes result from complex algorithms, making them virtually impossible to unpack. Miners must therefore solve a demanding computation, denoted as cryptographic hashing function, for which they are rewarded through transaction fees. Any users in the system may become a miner. That's why it's a competitive game. Whoever can do it fastest can get a slice of newly created Bitcoins. Bitcoin is the currency running on the blockchain. Unlike conventional fiat currencies, it is not backed, regulated, or manipulated by any central bank. With a fixed supply, its value is mainly impacted by its scarcity and community engagement. Holders of the currency believe that the pool of buyers will increase in the future, ultimately leading the price to rise. For the time being, it is almost entirely about the speculation that Bitcoin will become a mainstream payment method down the line. Notably, however, not all cryptocurrencies are created equal. Some do not have a limited supply, while some have already reached this supply, meaning no further coins will be created. Alternatively, others may have a price linked to real-world stores of value, much like a loyalty program. Before investing, you should really do your homework to understand the differences between cryptocurrencies their applications, and how much of the currency is already in circulation. Bitcoins and other cryptocurrencies can be safely stored on private encrypted Bitcoin wallets, hardware offline wallets, or storage mediums like USB drives. The less secure option would be to have all crypto funds directly on a crypto exchange. However, this may represent a security risk, as over the years, some exchanges have been found to be susceptible to cyber attacks, leading some users to see their assets hacked. The trading of cryptocurrencies occurs via peer-to-peer transactions through the exchange of private keys and verification between wallets. They are then processed and permanently stored on the blockchain. Traders are therefore charged by the crypto exchange to transfer assets, as well as the blockchain miners to complete the transactions. To conclude this video, we want to address a common question many people new to the crypto space naturally pose themselves. Will blockchain and Bitcoin see widespread adoption? Only a small percentage of Bitcoin transactions are currently made in commerce, as many blockchain payment networks are still characterized by several crucial shortcomings, particularly related to transaction speed. Therefore, they are still mostly regarded as an asset class rather than a currency suitable for the exchange of goods and services. In the future, cryptocurrencies and blockchains are expected to increase efficiency and fraud protection in digital payment services, as transactions are fully traceable and can be sent seamlessly across borders. To provide these benefits to users, the underlying technologies will have to undergo vast improvements in performance and have the ability to handle far larger transaction volumes. Further obstacles to adoption relate to the fact that there is a lot of legislative uncertainty around cryptocurrencies, which compromises investor confidence and stifles institutional investment. Nevertheless, with 22 million Bitcoin wallets worldwide and an estimated 8% of Americans privately invested, the global adoption is already substantial.